Are you a crypto trader on Gemini, and does the thought of tax season fill you with dread? Do you find yourself wondering, what exactly is a Form 1099, and is Gemini going to send me one? If so, you're not alone. The world of cryptocurrency taxes is constantly evolving, and keeping up with the rules can feel like trying to hit a moving target. But it doesn't have to be a nightmare. In this video, we're going to break down everything you need to know about Gemini and the dreaded Form 1099. We'll cover what a 1099 is, which ones you might receive, and most importantly, what to do with the information when you get it. First, let's start with the basics. What is a Form 1099? Simply put, it's an information return. It's a document that reports various types of income to the IRS and to you, the taxpayer. Unlike a W-2, which you get from your employer, a 1099 reports income that wasn't earned as a salary or wage. For crypto, this can get a little tricky because it's not always just about capital gains. For a long time, the reporting landscape for crypto was a bit of a Wild West. Exchanges had different policies, and sometimes, the responsibility for tracking and reporting fell entirely on the user. But that's changing, and it's important to understand the direction things are heading. The IRS is getting more serious about crypto taxes, and the rules are becoming more standardized. This is why you need to be proactive and understand what to expect from Gemini. So, let's get into the specifics. What kind of 1099 forms might you get from Gemini? There are a few different types, but the one you've most likely heard of is the Form 1099 MISC. This form is used to report miscellaneous income. In the context of Gemini, this could be income you've earned from things like referral bonuses or staking rewards. If you earned the equivalent of $600 or more in a calendar year from these activities, Gemini is required to send you a 1099 MISC. And here's the crucial part, they also send a copy to the IRS. So, if you receive this form, you absolutely need to report that income on your tax return. But what about your trading activity? What about all those buy and sell orders, crypto-to-crypto trades, and even using your crypto to buy something? This is where things get a bit more complex, and where we need to talk about another form, the Form 1099-B. Form 1099-B is for proceeds from broker and barter exchange transactions. This is the form traditionally used by stockbrokers to report your capital gains and losses. Under new regulations, crypto exchanges are now being treated more like traditional brokers. This means they will be required to issue a 1099-B, or a similar form specifically for digital assets, to report your trading activity. This is a huge shift. Previously, many exchanges didn't provide this level of detail, leaving it up to the user to meticulously track every single transaction and calculate their own gains and losses. This change means Gemini will be reporting information on your sales and other dispositions of capital assets, including your cryptocurrency. The form will include details like the date of the sale, the gross proceeds, and potentially, your cost basis. Now, this is a big potentially. The cost basis is the original price you paid for the asset. If you transferred crypto from another exchange or a private wallet into your Gemini account, Gemini may not have a record of your original cost basis. This can lead to a huge headache if you're not prepared. If the form shows a cost basis of 0, your entire sale amount could be incorrectly reported as a capital gain, leading to a much larger tax bill than you actually owe. This is where your own record keeping becomes a superpower. You cannot rely solely on the 1099 forms from Gemini, or any exchange for that matter. You need to keep your own detailed records. Track your purchase dates, the price you paid, and the dates and amounts of all your sales. This is especially important if you're using multiple exchanges or wallets. The exchange only sees what happens on their platform. A good crypto tax software can be a lifesaver here, as it can pull in data from all your different accounts and help you reconcile your records. So, let's recap the types of income and what forms they relate to. First, you have ordinary income, which is things like referral bonuses, airdrops, or staking rewards. If you get over $600 of this, you should expect a 1099 MISC. Second, you have capital gains and losses, which come from selling, trading, or otherwise disposing of your crypto. This will be reported on a 1099-B or the new digital asset-specific form. It's crucial to understand that even if you don't receive a 1099 form, you are still obligated to report all of your taxable crypto activity to the IRS. Just because you don't get a form doesn't mean the IRS isn't aware of your transactions. The IRS has sophisticated data matching programs, and they can and will compare the information they have from exchanges to the information you've reported on your tax return. If there's a discrepancy, you could face a letter from the IRS, penalties, and interest. A common question we get is, do I have to pay taxes on crypto-to-crypto trades? The answer is a resounding yes. When you trade one cryptocurrency for another, let's say you trade Bitcoin for Ethereum, the IRS considers this a taxable event. You have effectively sold the Bitcoin for its fair market value at that time, and then purchased the Ethereum. You'll have a capital gain or loss on the Bitcoin that needs to be reported. The same goes for using crypto to buy goods or services. Every time you spend crypto, it's considered a disposition, and you need to calculate the gain or loss based on its value at the time of the transaction. So, how do you actually use these forms to file your taxes? The information from your 1099-B, as well as your own detailed records, will be used to fill out Form 8949, Sales and Other Dispositions of Capital Assets. This is where you list each taxable transaction individually, with the dates, cost basis, sale price, and the resulting gain or loss. The totals from Form 8949 are then transferred to Schedule D of your Form 1040, which is the form for capital gains and losses. This is where your net gain or loss for the year is calculated, and it determines your tax liability. For ordinary income from your 1,099 MISC, you'll typically report this on Schedule 1 of your Form 1040. The key takeaway is that you are responsible for the accuracy of your tax return, not Gemini. The forms they send are a starting point, but they may be incomplete, especially if you have activity outside of their platform. You need to be diligent, keep good records, and use the tools available to you, like crypto tax software, to make sure you're reporting everything correctly. The rules are changing, and the new requirements for exchanges to report more detailed information are coming. This is a good thing in many ways, as it brings more clarity and standardization to the process. But it also means you can't afford to be unprepared. You need to understand what these forms mean and what your responsibilities are. Don't wait until tax season is upon you to start figuring this out. Start tracking your transactions now. With that said, thanks for watching, and until next time.